Actively listed homes on the MLS saw a huge rise year over year now that we have the data in for April. 42% year over year, we saw an increase in actively listed homes for sale across Greater Vancouver. So we have finally breached the 12,000 mark in terms of actively listed homes, and that's the biggest number we've seen since the summer of 2020. And yes, that is something that is needed, but this market in Vancouver is so challenging and inconsistent that with that actively listed number being well above that 12,000 mark, we are still seeing sales dip under the 10-year average as well. My name is Kyle Mark from the Kyle Mark Real Estate Group. We have all the data in for April, so I'm going to be running you through the market update for April across Greater Vancouver. We're going to pick out the winners, the losers, which areas across Greater Vancouver are doing well, and what can we expect for the month of May. Over the course of April, we saw 2,831 residential transactions take place. And as I mentioned, even though we saw a 3.3% increase year over year, we're still sitting at a 12.2% decrease across the 10-year average when it comes to sold. So even though we're getting this increase in inventory that we're looking for, the sales are just not coming to fruition, and it has been an interesting month for sure. I know the first quarter for myself was extremely hot, the hottest start that I have seen in my career, but I've noticed a pretty big pullback over the last 6 weeks. Colleagues in the field, even some of my mortgage broker friends, have all had similar conversations, and I think when Tiff McCallum in December stated that we are no longer, or the Bank of Canada is no longer raising rates, I think most of us thought these rate decreases would happen a lot sooner. And I believe that's what brought on buyers, brought on people on market excited for this change in terms of mortgages coming down and more activity in the marketplace. So we saw the front end being very packed with action, but now there's been a pullback. In June is the next policy announcement. Will the rates come down? We're not sure, maybe in June, maybe in July, but also keep in mind though, that's just for one particular mortgage type, that's for variable rates. The Bank of Canada, when they talk about their policy rate announcements, that is just for variable rate holders. It has nothing to do with fixed rates. And in fact, I looked at a mortgage sheet this morning. Some insured mortgage products, which is a purchase under $1 million, will allow for a fixed term of under 5%. So the fixed mortgages have slightly come down, but those variable mortgages holders and people who are wanting to get those products, we haven't seen a reduction in that for quite some time. As we look for some expert commentary when we're talking about that 12,000 mark being breached in terms of actively listed residential properties, Andrew Lees, who's the economist for the Greater Vancouver Realtors, has said it's a feat to see inventory finally climbed above 12,000. Many were predicting higher inventory levels would materialize quickly when the Bank of Canada began its aggressive rate hikes, but we're only seeing a steady climb in inventory in the more recent data. He continues to say, the surprise for many market watchers has been the continued strength of demand, along with the fact few homeowners have been forced to sell in the face of the highest borrowing costs experienced in over a decade. And I would say a lot of people have been stunned by homeowners being able to hold on to their properties. But keep in mind, there was some reporting done last year that if you look into Vancouver, over half the owners and homeowners in certain municipalities are completely mortgage free. And they broke down certain municipalities throughout Vancouver, and a lot of these municipalities, not a lot of people have mortgages, and that is why there hasn't been this huge spike of inventory coming into the market. And even though we've seen breaching past that 12,000 mark, it's more so because people are now more eager to get into the marketplace, not in the form of being able to have to push a product out because they have been strangled too much by their current mortgages. If we're looking across the board, across all three categories, there were 7,092 detached, attached, and apartment properties newly listed for sale on the MLS in Metro Vancouver in 2024. So that represents a 64.7% increase compared to the 4,307 properties listed back in April of 2023. And this represents a 25.8% increase over the 10-year seasonal average. So we're starting to see a rebound to getting closer to these 10-year seasonal averages. Doing these market reports for a long time, we've been well under the 10-year seasonal average, and we're finally starting to see us surpass those 10-year seasonal averages, which is going to give us a little bit more option and hopefully breathing room in the marketplace. So as we continue on here, the total number of properties currently listed on the MLS is 12,491 units, a 42.1% increase, as we already spoke about before. So there is a lot of selection on the marketplace. What I've been noticing is if you have a good property, if it's priced properly, a lot of properties are moving within 2 weeks. But even if you're just slightly higher, not even egregiously higher than what the market bears, those properties are starting to sit because other property and inventory is coming to market slightly better than where you are at. And that is what is preventing some of these other sales and lagging it in the marketplace as a whole. Getting into the sales to active ratio, which tells us what kind of market are we in, if we are in a buyer market, seller market, or balanced market conditions. So as we get into the detached market here, we are currently sitting across Greater Vancouver at 17.6%. So that is strong balanced market for the detached market. 31% for attached and 26% for apartments. So attached are, duplexes, townhomes. That right now across the board is the most competitive, 31% sales to active ratio. So heavily in the seller market conditions, and apartments are also just in those seller market conditions. So high demand, but we're seeing now almost all three categories across Greater Vancouver are getting into seller market conditions. As we get into some more expert commentary from Andrew Leese, he states that another surprising story in the April data is the fact that prices continue climbing across most segments, with recent increases typically in the range of 1 to 2% month over month. The one segment that didn't see an uptick in prices in April were apartments, which saw a 0.1% decline month over month. This moderation is likely due to a confluence of factors impacting this more affordability sensitive segment of the market, particularly the impact of higher mortgage rates and the recent boost to inventory levels, tempering competition somewhat. And as I said right off the top, witnessing that pullback, I've noticed that pullback, especially in the condo market. So what is going to happen moving forward? It's going to be interesting if we're going to still see an influx of inventory, because if we continue to get more inventory, it is going to start dropping pricing if we can't keep up with the sales. Currently, the benchmark HPI price point, which is the house price index for all three categories combined across Metro Vancouver, is sitting at just over $1.2 million. Which represents a 0.8 increase month to month and a 2.8% year to year. So across all categories combined, we're seeing a rise in terms of those prices. And as we break down each one of those categories, the detached market is definitely coming back to full force. As I mentioned in some previous videos, it has been the soft spot, and we usually see a soft spot in the detached market every couple of years, and then it starts to really ramp up. And we can see that with the sales to active ratio across Greater Vancouver, it's getting close to those seller market conditions. And as we break down the benchmark pricing for the detached market, you're going to see how it's starting to really increase. Just month to month, from March to April, the detached market saw a 1.6% increase, which is quite dramatic. And year to year was a 6.3% increase, which is very robust and strong for the detached market. Sales that were recorded were also increased just slightly year to year at 0.7%. And then when we get into the apartment benchmark pricing, the benchmark price now is sitting at $776,500. Which represents a 3.2% increase year to year and just a 0.1% decrease month to month. So that's what that pullback we've been talking about in terms of pricing. As we get into attached home sales, we saw a 16% increase in sales year to year. And then the benchmark pricing for the attached market is now sitting at $1.127 million $200 for a townhouse, which is a 4.3 increase year to year and a 1.3 increase month to month. So the townhouse attached market, very strong, saw some nice gains, but out of all three categories, we saw that the detached market has been performing the best. What I want to do now is pick some of the winners and the losers. So as we look across Greater Vancouver, we're going to go through the detached segment, the condo segment, and the attached segment. And I'm going to do a quick overview. We're going to have the data on the screen so you can peruse and see what we're talking about. I'm going to pick out which municipalities have been faring very, very well. So as we get into the single family detached, you're going to be able to see that in the column here with the 1 year change, some of the big time winners are West Vancouver with 7.8% increase year to year, which is very strong, getting close to double digits. Port Moody, 7.1%. And then we get some of the big shooters here, 10.1% increase in Pitt Meadows, 11.7% increase in New Westminster. So those double-digit numbers are starting to come in effect, which is some big-time appreciation. And the one that takes the cake here at 14.5% is Burnaby East. That is a massive year-to-year appreciation, and that's what I've been saying all along. There's been a little bit of a dip, and now the detached market is slowly, brick by brick, building up its standpoint. I know that across the board for Burnaby, for example, if you take the whole Burnaby market year to year, there's been an increase from, I believe, last year in March, it was sitting at around $1.8 million for the average price point for a detached home in Burnaby. And now it's over the $2 million mark if you average the three. And you can see right here, just with Burnaby East, 1.994 is the average price point in Burnaby East, 2.118 Burnaby North, and 2.3400 Burnaby South. All three segments in Burnaby have done very, very well in terms of the appreciation. And Pitt Meadows sitting at a 1.317 average for a detached price point. And when we look at on the flip side of things, where some of the losers were, Whistler minus 4.6%, Squamish 4.5%, and finally Bowen Island 3.8%. So you can kind of see, Whistler, Bowen Island, Squamish, sometimes they can be more recreational properties. When it comes time when inflation is high, finances are tight, those rec properties are usually the ones that pay a price here. And that's probably why there's been a bit of a pullback. As we move down into the townhouse segment to see where these big changes have been year to year, there hasn't been as significant increase as the detached market, but we do definitely have some strong movers here. We can see that again, Burnaby East townhouses 8% increase year to year, a 7% increase in Whistler, and a 6.6% increase in Burnaby South. So Burnaby in both segments have been performing very, very well. And then you can see here as you go over Burnaby South, average townhouse price 1.047 million. Whistler 1.577 million, and the other winner here, Pitt Meadows at 7.5%, $870,300. I know that I had a buyer who made a great purchase just earlier in the year in Pitt Meadows, and he's seen already 6 figures of increase in appreciation in just a couple months since he's purchased. As we go down and look at some of the losers, not really any losers across the board. There was no negative appreciation. The closest that we got was Port Moody at a 0.3%, where the average townhouse price is now sitting at $1.031 million. Keep in mind when we're talking about, this is a very broad spectrum. This is taking all the data together. So if you're wanting to get something that's more specific, all my information is in the description below. You can book a strategy call with me and we can dive into these numbers even deeper. As we get into the last segment here in apartments, seeing who are the winners and losers. Again, the detached market has performed the best. There weren't any double-digit increases, but some of the higher increased appreciation, we saw Pitt Meadows, and that's been a theme across all three markets. Pitt Meadows is a municipality that's on the come up for sure, 6.9%. Average price point of a condo, $633,000, which is quite surprising. 6.8% in Whistler, $732,000 for your average apartment. And other than that, there hasn't been too many other big time movers and shakers. They've all been around that 1 to 3%. There's just been one loser in the negative, 2.4% in Ladner. They dropped to an average price point of $685,100. So a little bit of a drop. But, the concession is if you've been holding for a long time, these 10-year numbers, 139% in Ladner. And you can see it all the way down in this column here. It shows the 10-year average. Pretty much when we even detach market, most of these properties have all doubled, almost 1.5 times their value in 10 years, which is very, very nice for those people who've been holding. This graph here, the Greater Vancouver trend, blue denotes the detached, red is townhouse, green is apartment, and you can kind of see where we're coming from here. We had a nice run up. This was, as we were getting out of COVID, things started to drop down a little bit with the interest rates, and then, starting to come back up here again. We had a little bit of a pause, and then the last couple months, we've seen another increase in terms of the trend lines and the home price index. So, the Vancouver market, despite all these other challenges, is still performing very, very well in the height of the highest interest rates we've seen. Pretty much every single sub area within Greater Vancouver has seen appreciation and good gains over the course of the year. With the economic climate that we're in, to have any sort of increase in appreciation in this climate is such a win. No one was a big loser losing 10%, 15%. So as long as you're holding on to your assets, you are doing well in this market. As we are out of Q1 and entering Q2, I did want to go and take a step back and look at what has happened across the country when it comes to Q1 now that we have that data in. So we've seen a lot of changes at the federal level, the provincial level, and municipal level that have really played a part to the market that we are in. So in Q1 2024, you can read with me, as Canada approached election season, the federal, provincial, and municipal governments enacted several key policies aimed at tackling the persistent issues with the housing market. These policies are designed to adjust market dynamics, improve housing affordability, and control speculative activities. So what were some of these things that came in? So we knew that the federal initiatives included extending the foreign buyer ban, adjusting caps on foreign student visas to moderate demand side pressures, and financial commitments were also made to enhance housing infrastructure and support rental housing construction. So the provincial government, for example, in BC, did that mass rezoning. Coming up here next month in June, all the cities need to fall in line with their land use policies. So depending on where you are at, size a lot, but most residential lots are going to be able to put up to 4 units on one property and up to 6 units when it comes to purpose-built rentals. We also know with the province, they improved the first-time home buyers incentive and now have stretched out the numbers for that. So now instead of dealing with a $500,000 purchase, it's gone up to $835,000 that you can now be exempt from the property transfer tax, which is a savings of $8,000. On the pre-sales, it's over $1.1 million. And then it goes even higher if you are purchasing something for purpose-built rentals. So they're doing a lot of zoning changes to help with people selling their residential units and essentially incentivizing developers to start building more purpose-built rentals. I'm here living in Vancouver. I see a lot more boutique style buildings going up that are strictly purpose-built rentals. So that should help. Well, I shouldn't say should help. Hopefully that's going to release some pressure for some people, but we are still in such a deficit when it comes to affordability and housing that we need a lot more of these projects coming online. We also know that coming up here in May on the provincial side of things here in BC, the short-term rental ban is going to come into effect. So unless you're in a municipality such as Whistler or communities under 5,000 people, all short-term rentals are going to have to be returned to the long-term rental pocket or taken off completely, or you're going to be liable to some big-time fines. The city of Vancouver also did a massive increase. This was a few months ago last year, increasing the short-term rental license from $100 and some odd to over $1,000, and they are committed with that surplus of being around $12 million a year to put into enforcement. So if you're trying to cheat the system, they are going to find you. I know that they have people working very hard on it. The fines, I think, start at $3,000 a day. If they fine you and you don't pay the fine, they can take you to the city prosecutor, and then that fine can turn into $10,000 a day. So they're not playing around. So if you have an Airbnb and you're trying to skirt around things, be very, very careful. When we dip into the pre-sale market to see the health of what's been going on and trying to get more product onto the streets across Canada, from January to March, there was 1,000 units that popped up, which was double from last year, which was only 500, but was still way behind the numbers of 3,300 that we saw in 2022. So builders, developers are also feeling the heat when it comes to projects. We know that interest rates are very high for us personally. When you're getting these construction loans, they're well into the double digits where we are at now. So that is why these higher rates, they start to have dissuade developers. They hold off on projects. And that's why we have seen the last couple of years, not a lot of movement. So we need these pre-sale projects moving. We need the cities and municipalities to be able to enhance the application process. We have artificial intelligence now. It shouldn't take weeks and months to get this paperwork through. We need these builders to build these units to get them onto the streets for everybody, whether it's purpose-built rentals or properties for sale. Over the course of the year and as we enter into Q2, it's going to be really interesting, and it's a little bit of a balancing act to see how these big changes on the federal level, the provincial level, and the municipal level are going to have here in BC and across Greater Vancouver. As all these cities settle into their new land use policies, what's it going to do to the market? Will developers have an appetite to buy bigger lots, to build these 4 units? Is it even going to make sense once we get the zoning bylaws for what it takes for these units? Are they going to have to build parkades? So how is everything going to work with these municipal changes? What are developers going to do? We've seen similar changes happen across North America with not a lot of success. So depending what the municipalities state with their bylaws, it may not even be viable to put these properties up for sale to get 4 units on a residential lot. If it is viable, depending on what the cities decide with their zoning bylaws, then we're going to see an increase in price point. Detached properties are going to be very, very valuable if it makes sense for developers to either put in 6 units on a residential lot for purpose-built rentals. As I mentioned with the property transfer tax exemption, for small-time developers or even, a couple people who are wanting to pool their money and build some smaller purpose-built rentals and take advantage of some of these incentives, it will give people that opportunity. It's going to be really interesting to see what is going to happen, if it's going to be even viable for developers to want to move on these new land use changes. It's all going to come down to the zoning bylaws. We've seen stuff like this all across North America, California, and Minnesota and other states, and they've had similar land use changes. But to be able to put 4 units on a little city lot, they were requiring developers to put in a parkade underneath the project, which is just not financially feasible. So they did not have a lot of applications for this. But where are they going to put all these cars? It's going to be really interesting. The cities are packed with cars and not enough parking already. And now if you want to do all this densification, where is the infrastructure? But if it makes sense for developers, property values are going to shoot through the roof. We know that with the enhanced property transfer tax exemptions, even people who are wanting to pool money together and perhaps want to take advantage of some of these rental incentives as well to build these purpose-built rentals up to 6 on a residential property, maybe get some small town or small-time developers into the mix as well. But we will have an answer to that in June. What I foresee is the detached market to continue to catch up to the townhouse and condo market. And my recommendation for anyone, if you're looking to sell, for the most part, we are in seller market conditions almost across the board. I have more advanced analytical data. So if you're wanting home evaluation or more information about the city that you live in, book a call with me. It's in that description below. And I would love to help you with your real estate goals. And I do think it's still going to be a strong market, but I think a cautious market until we finally get the Bank of Canada to commit to a date when they are going to lower their rates. But in the meantime, I'm going to put my property tour videos up here, and you're going to want to check out other monthly market updates that are more specific to your area here. I hope you have a great rest of your week. Until the next one, you take care.